All right, welcome everyone to today's Twitter Space session. These educational AMAs are brought to you by XD.com. My name is William, head of XD Academy, and your AMA host. A little bit about XD.com before we get started. Founded in 2018, XD.com serves more than 7.8 million users with more than 1 million monthly active users and a total of 40 million users in the whole ecosystem. As of right now, I believe we have more than 800 tokens available on the trading platform, as well as 1,000 trading pairs available to trade. So if you haven't checked it out, definitely come check it out, and you'll see that we have quite a lot to offer. That said, the exchange does stand out as the world's first social infused exchange due to its innovative integration of social elements into the cryptocurrency trading experience. Unlike traditional exchanges that focus solely on transactions, X.com incorporates social features that enable users to engage with each other, forming a vibrant community within the platform. All right, a little bit about XD news before I jump into today's topic. As of this week, I believe XD Wealth Management, I believe it's like XD Earn. Yeah, we have launched a new Bitcoin VIP wealth management product, and so it does yield about 7 to 18%, which is pretty radical, pretty great for Bitcoin, isn't that? And that is, I believe that is probably one of the highest Bitcoin yields you can actually find in the Web3 industry. So if you're interested in earning a little bit of yield on your Bitcoin, especially if you're not trying to trade it, but you're trying to hodl it, you just want to earn that extra percentage, definitely feel free to check this out. In addition, we also, I believe our financial department has also launched a commission policy for exclusive financial management products here. So if you know anyone who you want to introduce your clientele to subscribe to these exclusive financial management products, you can provide one of our business development staff your user ID. You get a 10% commission. An ROI every month. So, and this is like, I believe anyone can actually participate. So that's something else you can also check out if that's suits your fancy. And last but not least, I believe we also have a few others. We also launched a whole bunch of 30-day high interest staking products. So you can stake your SOL tokens, your ETH tokens, your Filecoin tokens, or even your Bitcoin Cash tokens. That's BCH, and you get pretty high yield right now. It's like, like for example, the 30-day ETH APR is 9% right now. That's actually pretty high, considering the fact that most of them you only get about 3-4%, even if you use a restaking protocol. So if that's something you're interested in, you have a little bit of if you have any Soul coins or ETH or File tokens or Bitcoin Cash, and if you want to earn the extra yield, definitely go check out our 30-day high interest products. And I believe, last but not least, we've as of I believe XD.com, we have started a new category of trading. I believe it's one of the new zones, and it's actually based on tokens for intellectual property fractionizing. This is actually related to today's topic. So if you're interested in buying and earning, or of course owning a specific part of an IP that a company is actually is created, intellectual property for that matter, assuming this is patent related, then this basically helps companies raise their funds, and it also provides transparency to you as an investor. But of course, in return, you get royalties involved, and of course, you also become the co-owner of these real world assets, right? All right. So that being said, if you're interested in any of those services, definitely go check out our platform. We have a lot more to provide. All right, so let's just jump into real world assets today, and I really want to talk about tokenizing these real world items, these products, these things, tangible value, right? So like the real world assets, here's the thing, it's a really big, like, abstract concept, and because it encompasses so many things, in both tangible things you can touch and assets that are also intangible things you just can't touch, right? So this is a really wide range. It goes all the way from like physical properties, like real estate properties, infrastructure, of course, buildings, and of course to like intellectual properties, just like that new trading zone that we created, that like the IPs, the stuff that like relate to patents, right? or even utility patents for that matter, like how you do something, how you make something. This is something new, so they want to someone patentize the method of doing something, even though the whole concept is not new. It's called a utility patent, right? You can even you can even tokenize like financial contracts for that matter. So yeah, it's like a piece of paper, it's a document, it's legal, but you've made it digital, right? So things there's so many things that you can like tokenize. It's not just things that you can like touch, like tangible things. I know that's probably the easiest way to understand like real world assets, like things you can touch, things like, products or real estate. That's probably easy one to understand. But it can also be on intangible things as well, like documents or, of course, intellectual property, like patents and stuff, or how you make things, how you do things, right? How you run a specific nuclear factory or the specific safety. Because I remember reading one patent that's related to that. Anyway, so there can be a lot of intangible assets in that regard, and they're intellectual property in that regard, right? But it's basically, long story short, it's converting all these rights, these privileges, to a portion of these real world assets, and you make them into digital tokens on a blockchain, right? I'm not going to jump into too much to like which blockchain, although I will mention a few examples later down the road. But as of right now, like a lot of layer one blockchains as well as layer two right now, they're actually applying these tokens for real world asset utilization. All right. So that being said, this whole real world, I'm going to just make it a short. I'm just going to call it RWA at this point because it gets it's a word melt. So this whole transformative process, right? It really takes advantage of blockchain technology as well as the smart contracts. Like without smart contracts, it actually doesn't work. So it takes both blockchain and smart contract, and then basically it represents ownership or aka your investment in that specific asset through, of course, digital means, right? And of course, that essentially brings really traditional like assets, like I said, physical or unphysical, right, into the whole digital or in digital Web3 realm, right? So you're probably thinking, okay, so why is it significant? Okay, well, like think about it, right? Like how do we revolutionize, how do we really upgrade and change the how we trade and handle these perceived old assets, right, when we take it on to the digital world? We won't be bound by these specific limitations regarding paperwork or middleman or very pain in the ass legal processes. As of right now, of course, all three of those exist. We still have the middleman, we still have the paperwork, we still have the legal processes involved. But imagine like say let's push in the future like 10 15 years in the future, like ownership becomes very simple. It's basically just holding a digital token. You'll have to imagine like walking into like some kind of like I don't know, some kind of like shop, and then they'll have to ask you your VIP card. But by then, you're just going to open your Web3 wallet and show that you actually have that very specific digital token in your wallet that signifies your VIP status at that shop, right? So this is really going to be taking some change, but of course, there's lots of different advantages and disadvantages involved with this. We're going to go through a little bit of both as well. So do keep in mind that when we do start integrating these RWA, these real world assets, and tokenizing all of them, we really are paving the way for more efficient and really more accessible investment landscape. And that's really a big thing because think of like regardless where you are situated in the world, you want to buy like let's just say a house in another country, like I don't know, Hawaii or something, right? Well, in order to do so, you have to find a lot of people and things like legal representatives, considering you're not even there. And the whole process, of course, is based by the country. And of course, it also depends on the real estate as well. But it's a very arduous process, right? So the possibilities for tokenization really virtually limitless, considering the fact that I guess in a sense you can say it simplifies a lot of more complicated processes that would take us a lot of money and of course a lot of time, and sometimes it also requires you to actually do the whole process physically in person, although that's not the case for everything at these days, right? So think of it this way, it's really a fusion. You're trying to fuse traditional assets with using blockchain technology, and this really forms more of like the new paves the way for RWAs. It really paves the way so that these real world assets can be actually be tokenized and utilized effectively. Although, in my personal opinion, for RWAs to really be used effectively, I think we're still at least a few years off. Though I do think that this industry is going to grow considerably in the next few years. All right, so but before I jump into the advantages, right, I really want to start talking about why it's so relevant in this our current modern Web3 industry. Because it's not just about being accessible, right? So I did mention how like you can literally be halfway around the world and you want to invest in a real estate that normally required you to actually be at that country, in that country, and be on site or hire a lawyer to do so. Basically, you've given everyone the opportunity to invest in the physical or intangible opportunity, asset, regardless who you are, regardless where you are. But I think where you are and who you are, they both share really important aspects of RWAs, right? So imagine someone let's just look at a country that's really maybe have poor infrastructure. Like, I don't know, I hate to make Africa look bad, but compared to other first world countries, certain countries in Africa unfortunately lack the infrastructure to actually provide just the average person the ability to invest in, let's just say, real estate half around the world, right? And I mean, like, some people are pretty lucky to actually have banking access in Africa, let alone investment opportunities halfway around the world. Okay, well, with RWAs, real world assets, and now that we tokenize them, you actually effectively provided all these people without banking services the ability to actually invest in a whole bunch of stuff that normally they wouldn't have otherwise, right? I'm going to jump in a little bit more in the banking and how banks relate to everything to real world assets tokenization, but we're going to do that a little bit later. So that being said, these RWA tokenization, that really levels the playing field, right? So it's not really, it makes the whole barrier to entry a lot easier, a lot lower, drastically lower, assuming that once we start having this technology properly applied, right? I'm still seeing it sporadically on different layer one chains right now. So it's going to be a little bit while until we really see where this is going to really bloom. But that being said, it really takes, allows a really everyday investor, and it really allows them to partake in like many more markets that's usually like exclusive for like specific elite traders or very specific investors with a reputation, right? I also do think that a lot of people who used to be very exclusive, like elite investors, we might potentially lose their jobs once RWA tokenization really takes a hold and the mainstream investor world, because once this is allowed for everyone, once everyone's able to do it, right? All these niche investors who focus on very specific, I don't know, like game cartridges made by like Super Nintendo Famicom. I remember like one which is sold by like $60,000 US. What was it, like Castlevania or something? If you want to own a part of that Castlevania like legacy game that's like completely perfect and wrapped, you'll be able to do so with real world asset tokenization, right? But as of right now, we still have that really high barrier to entry in those specific niche industries, right? So really, this whole democratization of investment opportunities, really, sorry, that's a wordful. You're basically democratizing the whole investment opportunities, right? So it's not just wealth preservation that we can, but you can also see it as more of like a wealth creation method, right? It really empowers a lot of individuals, regardless if you're an investor or not, to really diversify your portfolios. Of course, not just in cryptocurrencies, but also digital assets, these tokens specifically are related to real world assets, right? Regardless if they're tangible or not. So of course, if you manage your risk effectively, and you potentially reap the greater returns of these specific real world assets investments, right? And that being said, they do keep in mind like the whole point of tokenizing real world assets to really foster efficiency and stability in these funds markets, but while evolving the Web3 industry, right? So it really is like a big change. I would almost say like a paradigm shift to how we really approach investment. I think it's still like a real RAS organization. It's still, I hate to say it, but I still think it's a niche. But give it a few more years, I really think it's going to start taking root to really see how this whole democratized access really provides a lot more people to invest in things that they would never be able to. All right, so I'm going to quickly go through how to tokenize a real world asset, just give you like an abstract understanding. And I'm just going to use I'm going to use real estate as an example. I think that's probably the easiest one to really relate. So of course, first and foremost, you need to create the digital tokens, right? So of course, once you create that digital token for that real estate property, the whole representation of the ownership shares of the property is created, right? So if you create 100 tokens, well, each token owned by a specific wallet is 1% value worth of that property, right? So this whole process is usually achieved by establishing some kind of legal entity, right? Is solely dedicated to that owning of that specific real estate. And of course, the digital token then, of course, represent the ownership shares, right? Think of it as stock, but it's like for real estate. I know, sounds weird, right? And then really entitles you as a holder to own a portion of that property's value, right? And it could be 1% of that whole property, or if it's like something humongous building, and you can own like, I don't know, 0.1% if the token allows you to do so, right? And if the whole building is, being rented out to like, shops or people, just residential area for that matter, you can actually reap a percentage of the income generated by that building as, of course, digital assets. At least I would like to assume that's digital assets. Now, I would assume that like that some kind of smart contract would send you like stable coins every month because you own that specific token representing your share of the asset, which brings me to the next step of you applying the RWA. We need smart contracts. So it's not just the blockchain and making the token itself. We need a smart contract to manage all these new tokens, right? And basically, for those who may not be aware, they're basically decentralized programs, right? They're built on blockchains, and of course, they govern the issuance, and of course, they track the balance, and also they distribute the benefits associated with these digital tokens for the purpose of RWAs, right? So let's just get back to our real estate property example. So our smart contract will then handle the tasks such as, sending out the, monthly income, like revenue generated by the renting out the building or the real estate itself, right? And regardless if that's to 100 people owning, one token because there are 100 tokens in total, or if there's like, 10,000 people because certain people have like 0.5 of the token for that matter, right? So, and of course they also implement lots of different government decisions, right? What if like, the building needs to be renovated because it's like 5 years old or 10 years old, or something's broken and everyone gets to vote. Should they spend $5,000 or $10,000 to actually renovate the hallway? And of course that would eat into your monthly revenues, right? But you can actually vote, right? And of course that also, so I think that's really interesting. Like as of right now, you kind of have to it's such a pain in the ass to actually, it doesn't exist, right? Because the only way to actually get around this whole situation in trying to earn a certain value, I guess, is to buy shares of a real estate management company, or excuse me, a real estate company that owns real estate, right? And that's the only way. But you can't directly have access to the governance process, regardless of whether it's making specific decisions in fixing up the building itself, or actually selling it or buying or whatnot, right? All right, the next step, of course, is you want to sell and distribute your tokens, right? This is taking a little bit longer, so I'm just going to quickly, make this a little bit faster so that you guys have just a general idea of how this whole process makes. And once, of course, you distribute the tokens to everyone who's actually bought the tokens, who sent, I don't know, like Bitcoin, Ethereum, or even stable coins, a smart contract, you send the tokens out, right, at a very specific date. And of course, after that, then you have to deal with governance. And of course, sooner or later, these tokens, they will probably be available on exchanges like XT.com as a secondary market trading, right? So let's just say, okay, you don't want to hold these tokens that are specifically associated with your ownership of that specific real estate. Well, you can sell it on XT.com, right? Sooner or later. But since we do have that new zone, I believe it's sooner than later at this point, right? So this really allows a lot of flexibility for token holders to really explore a lot of various price points, of course, potentially attract new broader pool of buyers once we have these digital RWA tokens on exchanges. And of course, not just more than one, but like most of the top 50 exchanges. Once we all really started adopting real world assets, I think it really goes a long way. All right, great, guys. Hopefully that gives you just a general idea like how the whole process of RWAs would actually work. And I just want to quickly talk about the advantages, because as I do think that advantages are a little bit obvious, but the disadvantages aren't. But that being said, let's jump into the advantages, right? And there's two, in my specific opinion, I believe there's two like very strong advantages. And once you understand these 2 points, I think you really got a really good base understanding of how RWA works once we tokenize RWAs, right? So the very first thing that's the really big advantage, especially for the whole Web3 industry, is that it increases liquidity, right? Once you tokenize a real world assets, I think real estate is a really good example. You basically add a lot of value into the whole Web3 industry, the whole ecosystem. But of course, specifically to if you deploy those assets on, say, Ethereum layer 1 blockchain, then of course that the value exists on the Ethereum layer 1 blockchain. But as a Web3 industry as a whole, regardless of what layer 1 blockchain has these tokenized real world assets, the whole industry is going to profit. It's just like right now where Bitcoin's like that pumped like tremendously because of the spot ETS. Well, at the end of the day, that trickles down to all the other tokens and coins out there, right? So once we have more liquidity, regardless of what blockchain it is, we start to see a lot more vibrant marketplaces. I don't mean just one marketplace, I mean everywhere, because the liquidity, it trickles, it moves. It doesn't just stay in block. Yeah, okay, sure. The majority is possibly still staying in Bitcoin. That's why it's still up like close to like 68 or 70K right now, but it still trickles down. Everyone profits, or at least most of the top 100s profits some of the most, if not the meme coins, right? So when you have this newfound liquidity, when you have all this new liquidity, right, it not only enhances the whole market efficiency because you have more liquidity, it also unlocks a lot of value that was previously dormant and cut off from the Web3 industry. So I don't know if you guys ever if you guys trade, but like if you are checking out this trading pair and there's not a lot of price action, a lot of movement, you can't really buy and sell without price action movement. And it's usually because there's a lack of liquidity in the whole trading pair itself. So what happens the opposite when you have a lot of liquidity?
This space was downloaded via spacesdown.com. Visit to download your spaces today.
Well, of course, the daily 24-hour trading volume moves, but only that, it moves a lot more frequently. So that's why, for sure, if you're looking at the big BTC slash USDT trading pair, that's going to move easily because they have a huge market cap and the trading volume is really high, right? Same thing. So when you have it's like the whole Web3 industry, the whole industry actually has a lot more liquidity than it has now, everything becomes a lot more efficient because everything has more liquidity, right? So that's a really big part of, and a really big advantage of tokenizing real world assets. Another big one, of course, I did mention this a little bit earlier, so I'm just gonna make this short, is the investment opportunities, right? So if you, regardless, you can say South Korea, North Korea, China, China, or maybe not China. I'm not sure how that works, or Hong Kong, or for Africa, or regardless where you are, you can actually invest in something like halfway around the world, or something digital that like normally you would actually have to be a part of a certain company, or you have to be into like the whole or be in the know-how of like intellectual property, like patents and all that, so you actually be able to invest. Right now, you won't have to. You just buy the digital asset, the token itself that represents the intellectual property or the real estate to really take advantage, right, of all these new opportunities. Right, of course, it's not just where you are, but it's also clearly whomever you are. So you could be a seasonal investor, or you could be like a beginner. The doors of wealth and creation right now, like it's going to be literally open to everyone. And the whole democratization isn't just about financial inclusion. Of course, that is a big part. It's also, of course, fostering a more equitable society where everyone has equal chance, right? With a very, very low barriers to entry. So no one has been blocked into actually investing in these opportunities. Okay, so hopefully that's pretty obvious at this point, right? We have a lot more liquidity for the Web3 industry to really become a lot more. It's like adding oil to your car or your wheels, right? Everything becomes more smoother. Now, of course, it also opens up a lot of investment opportunities to everyone, regardless where you are. Those are the two main advantages. Okay, let's jump into disadvantage. I think this part is a little bit more complicated because you're at this point you're thinking, oh, it's new technology. Why don't we just adopt it? Should be obvious. Everything's great. Well, it's not so black and white, right? And I want to talk about what the specific disadvantages as of right now of real world asset tokenization. And I also want to talk about specifically who it's disadvantaged for, because as much as I do talk about these disadvantages, unless you fall in very specific categories of entities, I don't see how all these advantages will apply to everyone. So to be able to really understand and really analyze real world asset tokenization on a much more proper understanding of how it's currently a little bit disadvantageous to be applying it right now, you have to understand it specifically who it's disadvantaged for, because it's not for everyone, right? All right, so that being said, what are the disadvantages? Let's kind of just quickly go look through these. The very first big one right now is we just do not have the infrastructure, the framework. The governments are not ready for real world assets. I think they are just barely trying to figure out how stable coins work and how they incorporate with current banks right now. I think they're just have their handful trying to get their legal compliance and the regulations down for stable coins. But I believe regulations is extremely unclear right now. Like, I think certain countries, say Singapore, Dubai, I think they're a little bit more like they have a head start. They're a lot more onto this than a lot of other countries. Even the United States, it's I wouldn't say gray area. It's becoming clearer, but it's still lacking a lot of clarity. You could run a lot of legal issues right now. So until we see a lot more regulated clarity, I don't see real world assets really exploding. But I do think that we are just a few years away to start really tokenizing very specific real world assets. Now, not everything and not every part of the world is going to be tokenizing every part of every industry, like real estate or intellectual property for that matter. But I do see specific countries definitely going to be tackling this once they get their stable coin issue in place. All right, of course, with new technologies, there's always security risks, and especially when you have these tokens start trading on DeFi protocols. So for those who might be interested in DeFi, as you guys probably know, we are having so many security issues right now. We have so many different vulnerabilities. I'm not going to even mention at this point, but like the layer ones and the layer twos, and then just the smart contract itself, it just millions are being just siphoned out, and trying to figure out who's a black hat hacker and who's the white hat one. There's all this spiel right now, but the security threat's real. All right. And once we start associating real world assets tokens on these DeFi protocols, and once those are stolen, like would you imagine that, right? You wake up to one day, you realize like the property that you own is now owned by I don't know, North Korea, the government, North Korea, or I don't know, or you one day you woke up, it's completely owned by someone else because let's just say you deposited your RWA token into a DeFi protocol to earn specific yield on another stablecoin or whatnot, right? And that DeFi protocol platform has been had some vulnerability and someone siphoned off your tokens. Well, who owns that physical property? Some other person, the unknown person now, right? Like that's insane. That's crazy. What if like your current house is tokenized, right? And you actually have in your wallet. And what if you have like some kind of wallet vulnerability? And maybe it's not even your fault. Maybe it's like the wallet of the program itself, right? That did happen. Like I mentioned the names, but that did happen to very specific wallet sort of software, right? So what if you lose that token in your wallet? Does that mean the hacker actually owns like these real physical properties? Like it's just so we do have real security risk, right? Unless we have, of course, this goes back to regular clarity. Unless we have those very specific laws to really protect you in place, you know what can happen will happen, and I have no doubt that sooner or later, once we have a lot more real world asset tokenizations adopted, and especially in all these like new DeFi protocols specifically adopted RWA tokens, we're going to have some kind of vulnerability, and we're going to run into this very interesting like lawsuits. So you're suing someone you don't even know who actually owns the property that you actually bought digitally, and it's going to happen. But like I said, I guess you can think of that as like a high quality problem, right? Um, so that being said, like this also runs in another problem. I would say this is part of security risk, but like the whole real world assets tokenization part, you need to trust the whole process to ensure that the smart contract is not vulnerable. Is that the whole storing the real world assets, someone storing it, like I don't know, like what's a good example? Like what gold pegs the stable coins, right? So there's a whole bunch of like gold peg stable coins out there. There's like Pax G. What was that? The one that's applied by Tether. I think it's like USTG or something like that. Sorry, but there's a whole bunch of like gold peg stablecoin, whether it's like calculated by the pound or by the grams or by the kilograms. There's so many out there, but at the end of the day, you have to understand, even though you own the tokens associated to the ownership of that physical gold, that physical gold is in some kind of vault in some bank somewhere in the world, maybe Swiss or England or whatever. But that's at the end of the day, that you need to trust that bank to store it securely, to manage it properly. And that's just another middleman that you have to deal with. The whole point is to remove the middleman, right? So as much as I do think that real asset tokenization is the future, we're still going to be dealing with the middleman to a certain degree because it's hard to remove total trust from the whole process when you actually have real world assets involved, right? We have a whole bunch of other issues involved with disadvantages, but just for because of time, I'm just going to quickly go through a little bit faster. Of course, this is not simple, right? It's the whole operation of running real world assets and tokenizing as well as managing. I think the managing part is going to be a lot more challenging because it really requires a robust wallet infrastructure. You're probably thinking, okay, why don't we just use the current wallets we have right now? Why don't we just use MetaMask? Well, MetaMask actually has snaps right now, so I think like sooner or later, someone who's handling RWA token management would probably make a side snap software to really be able to incorporate with MetaMask. But that doesn't really apply to all Web3 or even compatible wallets right now, right? So distinct from like very conventional systems, you really have to understand that these operational challenges are a thing. Right. We also have, of course, valuation concerns. Of course, every real physical asset or even like intellectual properties, big or small, they all have specific valuation concerns. And especially like if the RWA token is actually, say, trading on like, I don't know, the top 100 exchanges right now. Well, how do you really value the real asset when, say, the token asset has pumped, right? Because a lot of people want to be buying it. Does that mean the real asset's going to be pumping too? Okay, sure, maybe that is the case, but how about the opposite when the real world assets is not pumping. It's not selling, right? That you run into like all these other uncertain issues when it comes to volatility. When you have volatility and of course pricing disparities, one exchange lists this price and other exchange lists the other price. What is the underlying value of the asset, right? You run into these pricing issues, and this really affects investor returns, right? And of course, market stability. So at the end of the day, like when you have like the whole real world asset industry, I have no doubt that they'll most likely have to endure all these potential amount of social backlash when something goes wrong. And I do believe that when it can go wrong, it will go wrong sooner or later, even if it's not going wrong now. So who owns the underlying RWA, right? So at which point of time, if the digital asset has been transferred before and now, like how do you really correlate to the current local bylaws, and how do you figure out who's the current ownership, even though you transferred just before a very specific price has been priced in, or a very specific law has issued that real estate or that intellectual property to be valid or invalid, right? So like you do have valuation concerns, and of course this is correlated to the operation complexity with wallets, right? And last but not least, this is not common sense, right? I think it's still going to take quite a while until like you have like the really big financial like advisors to be really pushing real world assets. We haven't even have the spot Ethereum ETF at this point, and like the Bitcoin spot ETF, it literally just got launched a few months ago. So like we're really early and I think by the time like bank financial advisors starts getting educated by RWA tokens, I think it's going to be at least a few years from now. But it's gonna take time, right? So you have to understand this whole process, the traditional finance market, it takes time for them to absorb all this new technology to really make it to that level, and it even takes even longer for it to become common knowledge for the regular investor to really start taking it, right? So of course you'll have early adopters, but it's going to take time for education to really catch up. But I really want to target now the most important part of this AMA. If you take away anything in the AMA, this is the most important part. The bigger question of the disadvantages part is really who. So if you really understand this very unique level of analysis, who becomes disadvantaged in this new RWA tokenization technology? If you understand this part, you'll actually understand the biggest advantages of all and why we have yet to really start running with real world asset tokenization. It's all the middleman. End of story. So, the lawyers, the brokers, and of course, the banks. I am not joking. Let me explain why. Once you understand, especially the bank part, you understand why we cannot have real world asset tokenization immediately in all the first world countries. And it's because banks, they will lose so much money. They would put a lot of small banks out of business. The moment you've tokenized real world assets, think of it this way. In order to buy real estate, some form or matter, you have to transfer funds through a bank, right? You don't take like 3 huge suitcases full of cash and you go up to the buyers like, hey, look, I want to buy your house in cash. No, all these processes, regardless if you're buying real estate or whatever real world asset, you go through the bank, right? Unless, I don't know, maybe you're the mafia, you want to buy things through cash, right? But for most of us, we have to go through the bank. It's not just that, guys, it's all the middlemen. A lot of people are losing money, and it's everyone in between, the brokers, the lawyers, but you have to understand, the banks are the ones with the most money, and they have the most to lose. So once you actually understand that, well, if banks they have a lot of money to work with. So unless they actually get a portion and they really get a cut in this whole real asset tokenization industry, they're going to be putting a huge brick wall to make sure that this gets accepted as slow as possible. Now, think of it this way. Yes, there are lots of other companies out there that are already utilizing real-world assets, and they're tokenizing them, and they're tokenizing very prominent, really good blockchains, which I'll get to in a second. But at the end of these big corporations, these big companies, regardless if they're like electronics or they sell like or farm and they're incorporated, or they're doing like supply chains, whatnot, they need banking. They have bank accounts. When you have a business, you have to deal with banks. And what do you do with all your money? You deal with your business bank account, right? It's right now the banks will have the most to lose once you actually have this real world assets token specifically trading directly on a blockchain, because the banks don't make money when you do it. So, oh gosh, I'm going to use this quick example. There are specific banks out there that are working on RWA tokenization, and they are, of course, private blockchains that only banks can actually take advantage of. I know that MUFJ is it's a bank in Japan. It's one of the biggest in Japan. They are actually working on that right now. I think they're trying to figure out the whole like stable coin, the Japanese yen stable coin right now. But they have the RWA tokenization part on the roadmap, and as of course it's limited to banks, but why wouldn't it be, right? Unless the banks on all most of the banks really get into this specific industry, they're going to lose so much money. Like I don't like literally this with DeFi protocols can literally take over banks in like maybe like a few decades. I'm saying like 20, 30, 40 years from now. So all these banks, they have to adapt. They will adapt. And if they don't, you're gonna see a lot of small banks are gonna go out of place if they don't, right? So it's I would say I'd focus on the banks right now, but right now I think they have their hands full trying to just adopt stable coins to the point where they're, because once you actually have stable coins, that actually eats into their profit as well. So I think they're trying to adopt stable coins as quick as possible, or else what was it, PayPal or other companies are literally just going to eat into their profits, right? So, but that being said, yes, this RWA tokenization technology is really going to put a huge dent in the bank. So, but they have bigger issues as of right now. Let's jump into the examples. Okay, so now you have a good example of the lawyers, the brokers, the banks, everyone who actually the middleman who is between you and the physical property or the intellectual property is going to be losing a lot of money. They would sooner or later probably have to learn about all these RWA tokenization process and probably help in that regard. But that being said, we do have a lot of good examples in tokenization right now. I have a few of my favorites. I'm going to mention a few that that are pretty prominent, just big names out there. We have those who may be familiar, we have Hedera blockchain. So, right, that's the HBAR coin, right? So they're really exemplary layer one blockchain, and they are literally providing RWA tokenization services right now. And they're really robust because they have, of course, they have the features that really address very critical aspects, as of course, specifically related to regulatory compliance. Of course, you want lowest fee as possible, hence the bank issues, right? Banks issues with RWA tokenization. Of course, you have very transparent data management because it's a public blockchain, right? So when you have these RWA tokenization, they often require the really very strict regulatory standards, right? The good thing about like Hedera is they really offer really account level configurations to really enable these token issues to implement very, of course, KYC verification. They can also freeze accounts, right? They can manage the token supply. They can also check anti-money laundering, to ensure that money is not being laundered illegally, right? So I think Hedera blockchain, they're really doing this right. They're really doing a great service for all the companies looking forward to really tokenize all their physical property and, of course, the intellectual property as well. We have another good one. They're not as big as Hedera blockchain, but it's called Flux Finance. So if you guys are not familiar with it, they're actually a DeFi protocol. They support tokenized RWAs. Very specifically, they are governed by the Ondo DAO. But what's really cool is that you can actually lend and borrow your stable coins, a lot of different stable coins, against tokenized US treasuries on Flux Finance. That's so cool, right? So you can actually earn a yield through cryptocurrencies and stable coins like USDC by tokenizing US treasuries. I think you're gonna see that a lot in various other countries sooner or later. But Flux Finance is pulled off for U.S. Treasuries, right? We do see other big prominent names that are not related to like blockchain, right? Well, but sooner or later now they will be. And we have J.P. Morgan, they're one of the biggest banks in the world, right? And they actually launched a platform called Oinks, right? ONYX. And they started this like around 2020, just 4 years ago. And of course, they're operating a permission blockchain, so it's a private blockchain, right? So, long story short, it facilitates the trading of these tokenized assets. Of course, U.S. Treasuries. They also have mortgage-backed securities. They have their own JPM coin. They have their own stable coin. That specific coin that's stable. It's pegged to the stable U.S. dollar, right? Of course, but it's designed for, of course, banks. It's all for banks right now. And that's why it's private. You can't join this, you can't utilize this blockchain because only bank can actually join and actually utilize it to, of course, make payments to other banks, right? So it's only between banks, right? We also have, of course, another big name, Goldman Sachs, right? They've entered the whole digital asset space not too long ago with their own digital assets platform, and they're trying to utilize this new what's it called, like the Canton Network blockchain. I think that's really interesting. So because they're trying to also enable issuance, registration, of course, settlement, and of course, custody of various tokenized assets. So you have to understand that like this it's here. It's here to stay. RWA's tokenization. It's already happening. You got the big banks out there. You got the big traders out there. You got huge, good, really prominent technology, even the public ones like Hedera blockchain. You got DeFi protocols like Flux Finance. So, but I do think it's still going to take a little bit longer for it to really gain stronger traction. And with that, I hopefully you guys have a better understanding of what real world asset tokenization is, how it's applied, why it's relevant, the advantages, and of course the big disadvantage for very specific individuals and entities, right? A huge thank you for everyone listening from the very beginning. Now we're just gonna move up to the Q&A section, just in case if you guys have any questions, you guys ask me anything about today's RWA tokenization topic, and feel free to put up your hand, and I'll pass the mic over. All right. So it seems like everyone really fully understands real world assets tokenization. I'm really glad to hear that. So definitely look into more about the real world asset tokenization. I do think that this is going to be a very big industry. It's going to just suck up so much, bring so much liquidity and hold so much liquidity for various different blockchains, not just the ones that I mentioned. So definitely a huge thank you to everyone who joined today's Twitter Space session. We will have another one tomorrow. We have a special AMA tomorrow. It's going to be a YouTube one, actually, and that's going to be associated with our XT.com branding. We are going to have another AMA this Friday. I'll be providing everyone our my weekly report, technical as well as fundamental analysis, so you guys can definitely stay on top of your trading and investing endeavors. That being said, thank you very much for listening. Until the next AMA, stay curious, guys, and keep learning. Have a good one.